What up? What up? What up? Hey, it's your resident online mortgage lender back at you again. How y'all are? Hopefully, everything is well with everybody. Um, I'm going to give a few minutes before I get into said content or the reason I am reaching out to you guys again this evening, just wrapping up my day. Um, don't know about you all, but it was a productive day, right? Typically like that, or a long day, if you will, after coming off of a holiday. But per the topic, I'm getting several calls and actually working with two potential leads that are looking to purchase multifamily, fourplexes in this case, right? So when it comes to residential real estate, you have single family residences, duplexes, triplexes, and then fourplexes. Okay. And so I specifically want to talk the conventional 10,000 foot view, if you will, some important information, some, you know, information that you can use to shoot from the hip, if you will, if you're wanting to use traditional financing from the conventional bucket to finance these homes. Okay. And so, for those that don't know, Robert Lewis, NMLS license number 180100, also known as your resident online mortgage lender. Below, this is how you can follow us, follow the content, comment, ask questions, reach out. You can search pretty much on all of the platforms. The main one going forward will be YouTube. So make sure you go over there, subscribe, and hit the notification bell. That way you'll be notified whenever we come on. So, without further ado, this is what I wanted to talk to you about multifamily, specifically fourplexes. Depending on where you are in the country, will really determine the type of housing stock that you have. Typically, your fourplex, threeplex type scenarios that I've dealt with more in the Northeast, Midwest type area. Okay. Not a lot of land, in the major cities, folks are kind of building up and down, if you will. Um, in the Northeast, you even have some mixed use type properties where there might be commercial at the bottom and then residential at the top. Okay. But down south, headed out west, running a more threeplex duplexes. I'm sorry, might see some threeplexes, might see some fourplexes, but bottom line, depending on where you are, this is what you need to know. Okay, um, in order to get into one of these properties, okay, we'll start with duplex, triplex, fourplex. With the minimum, the least amount of down payment, you're gonna have to do an FHA loan. Okay, that's the only loan type that will allow 3.5%. Right now, everyone that I'm dealing with now, and a majority of the people that are calling me from, YouTube and things of that nature, are calling from outside of the state of Texas, looking to relocate to Texas. And in every scenario, they're going to need to go conventional. And here's the deal: bottom line, 2 units, okay, conventional loans, duplexes, okay, you're going to have to put down 15%. Now, this is just the down payment, okay, not talking closing costs. But for 2 units, you're looking at 15%, okay, 3 to 4 units, 3 to 4 units, you're going to, well, I'm going to say 3 units, let's say 20%, and 4 units, 25. Those are the down payments, okay? And then just a generic across the board, you're going to have 6 months reserves when you're looking at 3 to 4 units after you've brought all the funds to close for your down payment and closing costs. Now, that could vary based upon the conventional automated underwriting system, uh, DU or LP, and what their findings are based upon how strong your profile is. Okay, as far as credit, assets, things of that nature, it could vary. But again, just so everybody can have a general flavor of what I'm speaking of, again, look to have that 6 months in reserves afterwards. So if you're having to go conventional, what are some of the reasons people are going conventional? If you're in a community property state, when you get a chance, Google community property states. And the reason being is anytime that there's government insured lending in the form of FHA, VA, or USDA. Let me get a little color back here. Yeah, that's a little better. Anytime there's any form of that type of insurance, remember, VA doesn't lend money, FHA doesn't lend money, USDA does not lend money. Okay. And conventional Fannie Mae, Freddie Mac, they don't lend money. In the first three examples, they insure the lender, we the lender, that go out and make sure that you qualify for said product. Okay. So in a community property state, you have to qualify with all of the debt that's represented within your union. So if you have a spouse, legally, you got a spouse, you have to, or we would have to, at minimum, qualify you with all the debts, the minimum monthly payment. So say there's a car, student loans, credit card payments. Care less about what the credit score looks like because those folks could be what we call a non-purchasing spouse, but you'd have to qualify with all of the debt. So that's why a lot of people go conventional in these scenarios, right? Now, more than one way to skin the cat. And again, point I want to make is this: down payment, duplex, 15%, threeplex, right? 20%, and fourplex, we'll say 25%, not including your closing costs. And after everything is said and done, you have to have reserves. Okay. The house payment is $1,000. After everything's done, somewhere in maybe a checking savings, a retirement account, something that you can liquidate, you'd have to have 6 months of those house payments in reserves. Now, if everybody that I'm talking about, and the reason I came on, single folks, they're looking at this situation in the right way, right? Well, one's married, two single. Okay, looking at it in the right way, because if you can get 4 units the first time, why not? Okay, because you can also use the rent to help qualify the potential rent, right? That's going to be determined from a certain report, an addendum to appraisal to establish what the rents are in the area. And we could use up to 75% of those rents to help you qualify. So it makes sense, okay, to do it. But there's that barrier. Now, these folks that I'm talking about the best down payment assistance in the state of Texas. If you want to know what that is, check out my YouTube channel, subscribe, hit the notification bell, and I'm going to update that video from last year and do 2022. But haven't seen anything out that's going to beat what I've been talking about, simply because the recapture requirements are minimal on the conventional version, where you have to be in the home at least 3 years before any funds that you receive in the form of the down payment assistance are forgiven. Or if you're using the grant version, FHA, VA, USDA, right? 6 months, you don't have to pay any monies back. Then a year after being in the home, you can move around, right? You can convert all of the units into rentals. Okay, so a little different over here. We're helping folks really get to that generational choice type scenario where you can start building that portfolio. Okay, so just to recap, and if anybody has any questions, I see some folks kind of doing a drive-by. No pressure. If you don't have any questions or comments, no pressure. But if you do, no pressure. This is a safe zone. Ask your questions. We'll keep it moving. Specifically, we're talking conventional loans for multifamily and the down payment. Again, 2 units, duplex, 15%, threeplex, right? 20%, fourplex, 25%, plus your closing costs. What are the closing costs, Robert? Don't know. House specific, okay? I would advise let's get you qualified first to know how much and in what direction we're going to structure the deal. Okay. And co-signers are a great ninja strategy that a lot of people don't use. And when you're dealing with the right team, we can still get to down payment assistance. Right. So hit the link in the description of wherever you're watching this at. Hit the link tree. Right. Let me see if we can go to the link tree, show you what it looks like. There, you can download my app. Great to have the app anyway, because you can run scenarios and things of that nature from a principal and interest standpoint. Okay, if you're looking to come to the state of Texas, which is that's the majority that's the place where I do the majority of the loans, right? I say about 92%. Can lend nationwide, but majority in the state of Texas, right? So download the app. You can run scenarios. Remember, factor in for taxes and insurance and an HOA fee, right? If you really want to get a good picture. But if you want to be properly qualified, download the app, which is also a secure online portal application, and where you can upload the minimum items needed so that we can properly qualify you. Then I have realtors, not licensed agents, not people out here doing this as a hobby. I have realtors throughout the state that I partner with, that I know, like, and trust, that can represent you to find the property that you're looking for. And as a team, we all work together to help you get to your real estate goals. Again, 100 families, okay? And let me clarify, because I keep saying 100 families. Probably will do more loans than that, right? But specifically, 100 families utilizing down payment assistance, because everything that I'm reading for the last 8 years, the largest barrier, down payment assistance. Okay. A lot of exciting things have come to the fore over the last 6 months, dealing with credit as well, specifically student loans. Okay. If you have student loans, I know the CARES Act has been extended again, but here's the play, right? You need to get into an income-based repayment plan, okay, with a dollar amount associated with it, not zero. Could say $5. You could owe 200,000. I could take that $5 and we could use that to help you qualify. So you can leverage the proper type of debt to help you get into one of these properties. So again, not to ramble, conventional loans, down payment assistance, just recap: duplex, minimum 15% down payment; triplex, 20%; fourplex, 25%, plus your closing costs. Okay. If you want additional information, reach out. Showed you how to do so. And I don't see any questions. It's been a long one. I think this is the shortest one I ever did. Y'all probably gonna be like, you need to do these a lot more often. So what do I always say, guys? Yeah, my time is up. I thank you for yours. Look, let us be good to one another, and let grace abound. It's needed nowadays, right? And you know what? Until the next time, peace. Y'all be blessed. Good evening.